Good morning, my brown nosers and market posers. Welcome back to Trades and Gains, where the market is at all-time highs, the economy is quote-unquote fine, and half the data the Fed needs is currently on vacation because the government forgot to pay its own bills. Who would have thunk? This week is one of those weeks where nothing is happening, but at the same time, everything is happening. The setups we have are NVIDIA earnings. The AI king is set to report this Wednesday. We have Walmart earnings, which is the real Fed in this country at this point. The return of jobs numbers, kind of, sort of, maybe, depending on how broken the data pipeline still is after the shutdown. Crypto just puked under 95K for Bitcoin like a frat kid who just finished one of those blackout jugs, and everyone's asking the same question. Is this an AI golden age or 1999 with better branding and worse jackets? Because no one wears members club only jackets, because those were what the real cool guys wore. If you were selling, that ski powder, you had a members only jacket. All right. Anyways, let's break down what actually matters this week. Who's lying to who? And no, don't worry, your mom and dad are not lying to each other because we're in our 30s and they would have been divorced by now. And how this might set up trades into the year end. Let's go ahead and start with a vibe check. All right. Last week, markets basically said, we're bullish, but we're also terrified. But we're also buying the dip. But wait, also tech, dumping off tech. But don't worry, we're also hodling NVIDIA, unless our name is SoftBank. But also, if we're SoftBank, we sold our NVIDIA stake so we could go invest in other AI ventures that aren't currently making money, basically maybe getting into another WeWork. Anyways, the NASDAQ was down about 0.4% for the week. Tech had a full-blown panic attack like a mom who just lost her kid in the mall. The S&P 500, it was basically flat, like your girlfriend, just kind of vibing at the top like nothing's wrong. Dow somehow up 0.3%, even after almost puking 800 points on Thursday. Never underestimate the old man dividend stocks. Honestly, one of the best winners is, I like to call it the old white people indicator. Just think about it as companies that your parents invest in. IBM, Cisco Systems, you get the picture. Now, the catalyst cocktail looked like this. End of the longest government shutdown in US history, growing fear the Fed might not cut in December, which, by the way, those odds just tanked to 47%, babes. So, I've been warning y'all. Don't say you didn't. If you tell anybody that you heard about this, you know you heard it here first. Anyways, AI valuation is finally making people say, hey, is it normal for one chip company to be 8.5% of the entire S&P 500? And we have crypto. We can't forget about the redheaded stepchild. Bitcoin dropped back under 95K, almost wiping out its year-to-date gains at one point. So the digital gold crowd is currently experiencing digital motion sickness, but in real life. This brings us to the main event this week: earnings plus data plus Fed confusion. So let's talk NVIDIA, the stock that turned AI from a buzzword into a religion and now into a cult. The market cap is around 4.6 trillion, bigger than most countries. That's 2 Canadas, by the way. That's why we don't think you're a real country. At one point, about 8.5% of the entire S&P 500's market cap. It is the bellwether for AI trade, the data center boom, and the please don't let this be 1999 again crowd. This Wednesday after the close, NVIDIA reports revenues expected around $547 billion, up 56% year over year, and EPS is expected around $1.22, up 50% year over year. If they hit or beat those numbers, cool, that's already priced in emotionally. What actually matters are the following. 1, guidance. Does Jensen come out and say, yeah, we're still booked out, AI demand is insane, data centers are still printing orders? Or does he start sounding like we're monitoring conditions, which is CEO code for stuff might slow down, but please keep bidding the stock? And here's a bonus for you all. If he comes out and talks about quantum computing, we are going to the moon. Number 2, China exposure. U.S. export restrictions Blackwell chips, and the no advanced AI for China policy are all in play. If NVIDIA can't ship its best chips to one of the largest markets on earth, somebody's Excel model is lying. By the way, China is responsible for 53% of the chip supply buying in the world. So if they can't send their chips to China, that's why they're putting billions of dollars into all these US stateside companies to hopefully make up for that. Good luck. I'm pretty sure China's like 23% of their annual reoccurring revenue, or 19%. I can't remember. Anyways, number 3, competition in DIY AI chips. Google has TPUs, which are just shittier versions of the NVIDIA ones. Amazon has Trainium. That sounds horrible. Meta is building its own silicon. Dear God, that's not going to go well. And AMD is out here saying, hey, we'd like some of that $1 trillion TAM too. But guess what, Lisa? No one cares. The narrative right now is even if big tech builds its own chips, there's enough demand for everyone. That's either true or it's the AI version of housing never goes down nationally. And we've seen how that's been going. Number 4, CapEx and ecosystem math. We've got analysts saying for every dollar spent on NVIDIA, you get $8 to $10 downstream in AI products and services. Great, but at some point the question becomes, are we funding sustainable cash flow here or financing the world's most expensive science fair? If NVIDIA crushes earnings, hikes guidance, and shrugs off China and mentions quantum computing, AI stocks probably go parabolic and rip ass again. The mini panic moment in AI valuations looks like just that, a scare, not necessarily a crash. People who bought the dip get to be insufferable for another month. Can't wait to read Twitter every day if that happens. And if NVIDIA misses or guides soft, this doesn't stay a NVIDIA problems. It becomes a market structure problem because one stock is that big a piece of major indices. It isn't just a trade, it's a systematic sentiment generator. So yeah, Wednesday is not just another earnings print, it's a market-wide therapy session. Now let's move on and talk about the real Fed chair of America, Walmart. Earnings, it's Thursday pre-market. Every time Walmart reports, we basically get a surveillance tape of the US consumer's mental state. What we're going to be looking for is 1, traffic and basket size. Are people still going to Walmart and filling their carts, or is it more like I came here for eggs and gas and now I'm leaving with depression? 2, trade down trends. Are people trading from brands to private label? Are higher income consumers shopping at Walmart because inflation is still quietly punching everyone in the ribs and telling you to shut up? Tariffs and pricing, number 3. With Trump's tariffs still circulating through the system, is Walmart seeing pressure on imported goods? Are they absorbing costs, passing them through, or quietly shrinking package sizes until cereal looks like a sample bag? 4, guidance into holidays. This is huge. If Walmart sounds cautious about Q4, the holiday spending narrative could crack, and that feeds straight into the earnings expectations for the entire market. And it's not just Walmart. We've got a retail wave this week. Home Depot and Lowe's, housing and home improvement read through, Target, Gap, and TJX, apparel, discretionary. Am I still pretending to be middle class spend? And other retailers that tell you if people still impulse buy or if they're just there for toilet paper and therapy at that point. Remember, the US consumer is roughly 2/3 of GDP. If retailers say, yeah, inflation plus tariffs plus student loans are weighing on people, that's not just a feel bad story. That feeds directly into equity valuations, rate cut odds, and credit risk. If Walmart and friends look fine, margins hold, and guidance is solid, markets will say, see, the consumer is bulletproof. If not, that's when the soft landing story starts to sound more like turbulence. Now let's move on to everyone's favorite group project, the Federal Reserve. God, it's like I can't even go a day without talking to these people. Jesus. Currently trying to steer a $28 trillion economy with half of its dashboard turned off. Because of the record-long shutdown, the September jobs report is only now coming out. Some October data might never be released because, well, we have that orange-headed mango basically running the country, and he wants to look good. And Fed officials are openly saying, we really don't have full visibility, but sure, let's debate rate cuts live on TV. What could go wrong? A week or two ago, markets were pricing in a December rate cut as almost a done deal, like 70 to 95% odds. Then the Fed said, hold on, not so fast. Powell said, basically, December cut is far from guaranteed. Susan Collins, the Boston Fed, sees a relatively high bar for further easing and wants to keep rates where they are for quote unquote some time. Neil Kashkari didn't support the last cut, thinks the economy is more resilient than people think. Now futures are saying December cut odds, coin flip. So what's going on? The Fed's problem right now? Well, inflation is still around 3%, above their 2% target. A whole percentage point, by the way. Labor market is cooling, but not in panic mode. More in we're hiring slower and quietly laying off via attrition mode. Tariffs are a wild card at this point. They're inflationary, but politically popular, and data coverage is incomplete because of the shutdown. So they're effectively flying half blind. Which would you trust a half blind pilot to fly your plane? I sure wouldn't. Some Fed officials say cut more before we accidentally break labor. Others stop cutting before we reignite inflation and blow up our credibility again. From a market standpoint, here's why this week matters. Jobs data coming back online. The restored September jobs report is the first official labor snapshot we've had in a while. Even though it's delayed, it gives the Fed something to hang their December argument on. 2, private versus public data divergence. Private trackers have been showing higher job cuts, especially in retail and government adjacent sectors, slower hiring, signs of stress among lower income households. If the official data looks too clean or incomplete, markets may not trust it, but the Fed might still have to base decisions on it. Number 3, rates versus earnings. The entire bull market has been built on this story. Earnings are strong, AI is a secular revolution, and the Fed is gently easing us into a soft landing. If the Fed signals a pause in cuts while retail and labor data shows more cracks, that's when valuations start to look stretched. So when you see headlines this week like December cut now 48% odds, just understand what you're really looking at is no one knows what the Fed will do because the Fed doesn't even know what it's going to do at this point or what the economy is doing. That's got to be comforting though. Now, if you made it this far in the video, I want to make you aware that over at Investor Central Club, we are starting our Black Friday sale, where if you use the code BF35, you can get 35% off all plans. That is, again, BF35 at investorcentralclub.com for 35% off all plans. Now let's get back to our deep dive into this butt cheek, all right? Let's talk about the giant AI elephant in the room. And no, I'm not talking about your sister. We just ran through NVIDIA earnings, AI data center capex, and Fed uncertainty. But hanging all over this is one question. Are we in a rational AI bubble or just a plain old stupid bubble? On one hand, you've got analysts calling this a mini panic moment. AI pullback, profit taking, bubble chatter. You've got SoftBank selling its entire NVIDIA stake to fund even more AI bets. You've got companies like AMD saying, oh yeah, data center revenue is going to grow 60% over the next few years. And then we have Anthropic, OpenAI. Everyone is planning tens of billions to trillions in data center investments. On the other hand, you've got folks warning about vendor financing, securitized loans for data center buildouts, and a power grid that may not be ready for all of this. Concerns about circular money, AI companies investing in their own customers who then use that money to buy more AI infrastructure to justify the valuation. So investors are stuck in the fun space between, if this works, it's a decade-long productivity boom. And if it doesn't, we just financed the most expensive cosplay of the dot-com bubble. This week, NVIDIA's earnings become a validation test. If AI revenue is still exploding, if CapEx demand from cloud, hyperscalers, and model companies is robust, if margins remain thick, then the bull case says, see, this isn't just vibes, it's earnings power. If not, that's when all the AI bubble side conversations become the main story. Now, quick detour into crypto, because whether you trade it or not, it's a decent proxy for risk appetite right now. Bitcoin slid back under 95K, nearly erasing its gains for the year at one point. Ethereum also pulled back, and altcoins did what altcoins do, which is fall harder than your risk management. Thanks, Eric Trump, for saying we're going to have a pump into crypto. Jesus. Now, why does this matter? A lot of institutional money now treats Bitcoin as high beta liquidity barometer. When BTC gets hit alongside high flying tech and AI names, it usually means big money is taking risk off the table across the board, not just in one asset. Add to that AI data center power worries, infrastructure bottlenecks, concerns about tariffs and inflation, Fed uncertainty on December, and you've got the market that's not exactly in meltdown mode, but definitely not in everything goes up forever mode either. Now, let's close with what actually matters for your trading brain this week. None of this is financial advice, by the way. This is all homework. Yes, you still have homework even though you're in your 30s. So you don't go into this week trading vibes and TikTok clips only from those douchebags who tell you NVIDIA is going to the moon with no claims or basis as to why. First off, we have NVIDIA. Expect elevated implied volatility going into Wednesday. Post earnings, you usually get either an IV crush plus a directional move or a buy the rumor, sell the news fade if the numbers are strong but already priced in. Key angles, watch how other AI names react. Think AMD, Broadcom, Palantir, SMCI, CoreWeave, cloud names like Microsoft, Google, and Amazon. A strong NVIDIA print that fails to push the stock higher, that's your price to perfection tell. 2, Walmart and retail. Think Walmart, Target, Home Depot, Lowe's, and TJ Maxx. Walmart's commentary on the low to mid income consumer, trade down behavior, and food versus discretionary mix is huge. Target, Home Depot, Lowe's will help confirm whether spending is shifting towards essentials, repairs, and cheap goods, or if people are still YOLOing on decor and electronics. Good retail plus strong NVIDIA equals soft landing, AI boom, keep the party going. Weak retail plus cautious tone. We might be at the part of the cycle where earnings can't keep justifying these multiples. Number 3, we have jobs and Fed. The catch-up jobs report matters less for exactly what numbers print and more for how markets interpret it relative to the Fed's December meeting. Hot labor plus sticky inflation risk equals less likely December cut. Cooler labor plus signs of strain, cut odds right back up, baby. Now watch Fed fund futures, 2-year and 10-year yields, how rate-sensitive sectors like tech, small caps, aka IWM, home builders behave into and after the numbers. Number 4, crypto, the thing no one cares about. If Bitcoin continues to bleed while equities stabilize, that suggests crypto-specific flows. If Bitcoin and high beta tech both sell off again, that's a broader risk-off signal. All right? So, that's your week. An AI giant on trial, Walmart diagnosing the American consumer, the Fed arguing over rate cuts with half the data missing, crypto reminding everyone that what volatility actually looks like, and a market that's somehow at record levels while everyone feels mildly gaslit. If this helped you get your head straight for the week, don't forget to like the video, drop a comment with what you're watching, NVIDIA, Walmart, or the Fed, or maybe something else that I'm not even aware of. Subscribe so you don't walk into the weeks like this blind, like Ray Charles. And if you want deeper breakdowns of flow, dark pools, and institutional positioning, instead of just headlines, you already know where to go. Trades and Gains Substack. Go to the Investor Central Club YouTube channel and the rest of the ecosystem. I'll see you in the next one. Try not to blow up your account before Wednesday. See you guys on live on Monday morning. Love you.